Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys. Today again we will take a look at the euro currency. Just shy update since the action, as you can see, not really tremendous yesterday. So the major conclusion that we have come to in our weekly research stands around the crucial area that we will be watching for, and depending on how market will respond on this area, we will get the clarity. Should we be prepared for bearish continuation, because the breakout of this area will open the road right to the parity, or we should change our opinion and be ready for some upward action with currently unknown perspectives. Because although we have the poor, but still this is the bullish setup on the weekly chart. Trend on the weekly chart is still bullish, although market looks really heavy. By the cross-market analysis on the weekend, we have estimated that the chance on the bearish breakout on the euro seems significant, and that's why before we will take the real action on the euro currency, we need to see what will happen around this area. These areas we have estimated stands around 110 level. Breakout for the 110 level will erase the bullish setup as on the daily chart, as on the high time frame charts. Also, breakout below 110 will confirm some bearish pattern that also, as a consequence, will suggest action to the deeper levels, to the deeper targets. That's why the 110 area is important. This target stands as on the daily chart, as on the monthly chart. So, as we have explained in our weekly research, the breakout for the 110 will lead market first to the 108, then to the 104, and then could lead right to the parity. That's why the breakout through the 110 area is very significant. And right now, guys, the euro stands in the situation where this breakout is still possible. It hasn't been cancelled. Market right now stands in the upside retracement that should finish sooner or later. If we will take a look on the forward time frame chart, recall what we have discussed in our weekend. We said that probably market could form here the butterfly. This could be the left wing, that could be the right wing. Market could show the breakout and hit this target, where we should watch for how market will respond to the breakout of these lows. If this will be the wash and rinse, then we should not take the short position and wait what will happen next. But if market will break below these lows, taking out the stops that probably stand here and will remain here, will hold below these lows, that will be the clear signs that market is really bearish and probably will continue move lower. That's what we see right now. But as you can see, yesterday market has shown fast acceleration with this candle, and although this top hasn't been taken out yet and the butterfly is still valid, today we still discuss the possible alternative scenario to the butterfly that mostly will not change the overall picture, but just will create another shape of the upward retracement if it will not take the shape of the butterfly. This another scenario could be the Gartner's triple true sell pattern. So as you can see, if for example market will take it out of this top, then the next level that we will be watching for stands approximately at 1320. 1320, 1325. So really will be a really significant resistance, because here we will have the weekly pivot resistance one. Here we will have the 618 resistance, 113.23, the major 618 resistance level from this thrust down. And take a look, that will be ABCD target of this big AB equals CD pattern, and that will be also 1618 extension of this minor A, B, C bottom, D pattern. So we can see the cluster of the resistances, significant area that market hardly will pass through just immediately. So that's the alternative scenario to the butterfly. But it's still, guys, again, as I said, this market still holds with the 50% level. So first touch, the second touch, butterfly is also still possible because market stands below these lows. If upward action will happen, also it could take the shape of the butterflies that's shown in the hourly chart. So hourly chart, it has a bit higher targets. It's approximately 1344 area. It's slightly higher than this area, somewhere around this level, but this is really possible. This will be just some spike up and then market could turn down. This also could happen. For us, it's not really big deal what kind of retracement market will show, because it's again, just to repeat you, that's been said that we mostly expect the breakout for this level. That is what we would like to see before we'll take the short position. That's our major level to watch for. Because guys, I don't see any reasons to be hurry with the taking short here with some currently uncertain perspectives, because we can't expect the market really could accelerate. Since take a look, that market here could create another butterfly potentially. It could be created. This could be left wing. This could be right wing. If market will hold about these lows, we do not know. That's why here will be some uncertainty with taking the short position here. It could provide you the better entry point and a significant beta for the 200 pips, but you will get the more uncertainty. And as soon as we have the really deep targets here, we will have a lot of time and room to take the short position below 110, and we'll get sufficient profit. So, but here it will be much safer to take the short position rather than here. You probably understand what I'm talking about. That's why it doesn't mean that you can't take short here. You could do this, but you should understand clearly what the kind of uncertainty you take, where you will place your stop, and where you will close your position if you will be wrong. By my opinion, guys, if you still will take the short position, your stop should be somewhere above this resistance first. As soon as market will start to respect, it will not mean that you are right and market will turn down. It just will be could be just technical respect of the resistance. As soon as this will happen, you could move your stop closer to the break even. But if market, you should be ready. So if market will break through this area, will break this resistance and will shift trend to the bullish side on the daily chart, you should be ready for the closing the short position. That's your risk. That's why you have to decide whether you would like to take this position in the current situation or not. Maybe you will take some part decision. So maybe you will take the small part of your position, for example 20% of your position here, and we'll be watching what will happen next. That's also possible. But just be ready for the risk, and you should clearly understand what your risk will be with this current situation. Again, for us is major point here. Breakout below will open the road to the significant targets on the downside targets, and our major period for action will be if market will break through this level. Here, guys, it's possible, it's not forbidden, maybe even it's reasonable, because you can see here some reasons for that. You could do this, but guys, that's just another point of uncertainty, another type of the risk that you are taking here. So, but still, this is possible. So decide what is better for you. Both scenarios are possible. It's just depend on the risk that you are ready to take.